Welcome to an exclusive principle that separates the elite from the average. This is the 5 years principle, a framework that top profit investors worldwide use to filter opportunities and maximize compounding returns. The sequence you see here, 1, 2, 3, 4, 5, represents more than just numbers. It represents the minimum timeline required for exponential wealth creation. Everything we discuss today is backed by decades of market data and the proven strategies of the world's most successful investors. Let's dive into why this principle is non-negotiable. Here's the brutal truth that most investors refuse to accept. If you don't have a vision extending beyond 5 years, you don't have a future. And if you don't have a future, you're essentially investing in trash. Think about it. Every legendary investor, from Warren Buffett to Charlie Munger to Ray Dalio, operates on multi-decade time frames. They understand something fundamental: short-term thinking produces short-term results, which in the world of investing, means mediocrity at best and catastrophic losses at worst. The question we must ask ourselves is visceral: would you invest in trash? Would you deliberately put your capital into something destined for the garbage bin? Of course not. Yet that's exactly what happens when you chase assets without long-term vision. You become the trash can, collecting worthless speculations that evaporate when market conditions shift. Now, let's understand the mechanism behind this principle. We need more than 5 years for the big compounding effect to manifest. This isn't theory, this is mathematical certainty. Compounding is the eighth wonder of the world, as Einstein reportedly observed. But here's what most investors miss: meaningful compounding requires time. Real compounding doesn't show up in year 1 or year 2. It accelerates dramatically after the 5-year mark. The big compounding effect equals becoming a top profit investor. This is the equation that wealth is built upon. When you allow returns to compound over extended periods, you don't just grow your wealth linearly, you experience exponential growth that puts you in the top percentile of global investors. Conversely, investing with less than a 5-year horizon creates small compounding effects, which mathematically transforms you into a loser. Not our words, just mathematics. Small compounding means you're constantly resetting your growth cycle, never allowing your investments to reach escape velocity. The staircase visual represents this journey. Each step builds upon the previous one, but only sustained climbing over many years gets you to the top. This brings us to the filter question every top investor asks. Does this asset have a vision beyond 5 years? If the answer is yes, you invest. Simple as that. If the answer is no, you only invest if you're dumb. Harsh? Perhaps. Accurate? Absolutely. This isn't about being cruel, it's about respecting the immutable laws of wealth creation. Assets without long-term vision are speculative gambles, not investments. They're trades at best, scams at worst. The thoughtful investor depicted here represents the due diligence mindset required. We don't chase hype. We don't follow trends. We evaluate whether an asset has fundamental staying power, competitive advantages, and a clear path to value creation over the next 5 to 10 years minimum. Here's where we separate the exceptional from the ordinary. Will this investment make us become top profit investors? Does top profit investors suggest this asset? If the answer to both questions is yes, welcome. You're making an elite decision backed by proven wisdom. If the answer is no, you're safe, but you'll remain average. There's nothing wrong with safety, but understand that safety without strategic risk means you'll never break into the top tier of investors globally. The psychology here is critical. Top profit investors don't become top profit investors by accident. They follow principles, they think long-term, and they invest in assets that compound over extended periods. Notice the contemplative figure with the checkmark and X. This represents the binary nature of investment decisions at the highest level. There's clarity. There's conviction. There's no room for mediocrity. Let's conclude with the principle distilled into one powerful statement. An asset without a vision beyond 5 years is trash. And if you invest in it, then you are the trash can. These aren't just words, this is the philosophy that protects capital and compounds wealth. Top profit investors worldwide understand this instinctively. They refuse to waste time, energy, or capital on anything that doesn't meet this standard. They know that their most valuable resource isn't money, it's time. And time invested in the wrong assets is time you'll never recover. This principle is your shield against mediocrity and your sword for cutting through market noise. See you again. But before you go, internalize this: the 5 years principle isn't optional for those who want to reach the top. It's mandatory. Every decision you make from this point forward should be filtered through this lens. Does this asset have a 5-year vision? Does it compound? Would the top investors in the world approve? Answer these honestly, and you'll find yourself making decisions that align with the elite, not the average. This is how we become top profit investors. This is how we compound wealth. This is how we win.